G'day everyone and welcome to Seven Questions, a podcast that shares the stories and compelling lessons founders, investors and leaders shaping our economy. I'm your host, Gerard, founder and investor at Partner and co-founder of Create Financial. Through Seven Questions, we explore the founder journey, idea to legacy, uncovering the insights, lessons and defining moments that shaped each founder and the amazing business they built. Whether you're a first-time founder, serial entrepreneur, investor, or someone looking for insights on entrepreneurship and what it takes to build a world-class company, these conversations are designed to inspire you, get you thinking, and hopefully you'll find some timely wisdom that propels your journey. G'day everyone, welcome to this episode of Seven Questions. I'm super excited to have Stew Glynn on the podcast with me today. Stew is the managing partner of Ep13, a Queensland-based investment firm that offers both syndicate-based investments into early-stage tech and has recently partnered with the Venture Capital Development Fund to have a dedicated fund. Stew, it's great to have you on the podcast, buddy. Thanks for being here.
Fantastic to be on here, Wayne. I think I'll be one of the earlier investors to join the pod, so keen to get stuck into it on Seven Questions. I think it's going to hopefully cover some fun ground and get some insight into what we're building here over at Ep13.
Mate, I love what you guys are doing at Ep13. I think you've actually, when I look back at the Queensland innovation ecosystem, I think Ep13 has played a fundamental role in building investment capacity here in Queensland and really demonstrated the value of investing into local Queensland startups. So I'm excited to unpack the journey with you. But before we talk about Ep13, let's help people get to know you. You grew up in Zimbabwe. You've had quite an awesome career. And we got to know each other about 10 years ago when you joined Steve in his family office. So why don't you walk us through who you are, your experience growing up? What are the moments that shaped you as, a professional, both as a founder and an investor?
Yeah, look, so I grew up in Zimbabwe. It was an interesting place to grow up. If you're on Zimbabwe, it had, I think, the highest level of inflation ever recorded, over 1 million %. It also, I guess we're currently in an interesting environment with fuel shortages at the minute. Back there in Zimbabwe was that time on 1,000 times where you had to queue for 4 hours to get sort of 20 liters of fuel. So Zimbabwe was a very entrepreneurial place because everyone had to be an entrepreneur. And I think that sort of was built into me. And I loved their environment. I loved the sort of the nitty gritty of early stage and trying to make things work and figuring out how to solve for problems, of which there were quite a few, in the macroeconomic environment in Zimbabwe, given the sort of, political environment. So growing up there was fairly unique. I think gave me a unique view on risk and an appetite for sort of entrepreneurship and playing into that sector, that space. And then at the same time, have a lot of influence, particularly from my father, who's a multiple time entrepreneur. He built businesses, and one business was a hardware business. He took it over from his dad and grew it from 10 staff to about 200. He was basically the Bunnings of Zimbabwe, driving around, doing trips around the country, sort of 6 weeks at a time, selling to all the farmers, and effectively became the salesperson. Then just started building it out over time and built a great business there. And then moved into starting to build, hotels throughout Southern Africa. Started in Victoria Falls and then built them in Mauritius and Zambia, Botswana. And so has been very entrepreneurial sort of influence on me. And I loved to kind of see what it takes to build. You don't really notice as a child how hard it is, but looking back at the sort of sacrifice and the hard work and what goes into it, it's not for everybody. But the people that are willing to swing the bat and go and do it, then there are rewards. And I think that's always been kind of built into me. That I think that which is why I love spending time in this sector. Love working with entrepreneurs, building our own business, which is an investment firm, but it also is a business at the end of the day. So that's been kind of the early journey. And then I moved out to Australia when I finished school to do university. Yeah.
What an incredible background, man. There are a bunch of things there I'd actually like to dig into, but we'll do just one at the moment. growing up in Zimbabwe, you mentioned the fuel and economic conditions, and really entrepreneurship was a necessity, not an option, right? You had to hustle. And I think about countries and economies and societies like Israel, where entrepreneurship is being born out of necessity. And it creates a different kind of environment in which founders operate, a different kind of pressure cooker, for want of a better term. What are your thoughts on the environment that we have here in Australia? It's more an opportunity-based entrepreneurial environment as opposed to a necessity-based entrepreneurial environment. How do you think that changes the nature of business and entrepreneurship?
Look, I think it changes a lot. I think about this quite a lot because I think what Australia has is almost the polar opposite. It's a barbell to what Zimbabwe was like. No one is forced to go down the entrepreneurial sort of scenario. You can go work a great job. You have high quality of life. You can effectively do a variety of different sort of jobs and get paid well for it. You've got healthcare, with Medicare that covers. So you've got a large safety blanket. You've got almost free education with high quality free education. And then you can you can even do sort of university and it's paid, you pay it back over time, but has a great sort of funding program with HEX. And so in general, I think that it's an amazing place. Australia is home to me now. On the flip side of that, the challenge with it is that it can breed sort of like a lack of entrepreneurialism because you don't need to. Like effectively, it's like, but then that starts to become an issue on, we're seeing it in productivity, we're seeing it in a variety of things because, things are safe as houses, Australian housing market, so we won't get into the detail of it. But like, I guess like my scenario is, the way I think about it is that I love to see entrepreneurs in Australia because they're not forced to do it and yet they go and do it anyway. But I think what's going to start to happen, and we're probably going to talk about it on the pod, but artificial intelligence is going to have quite a significant impact on what work looks like into the future. And so I think there is going to be quite significant impact on jobs and the way it works. And I think that we're going to have to be more entrepreneurial. We're going to have to be more adaptable to kind of figure out what the future job state looks like with the wave that's incoming on terms of AI. So I think that I love the Australian ecosystem. It sort of comes from a different style where effectively people are not forced and therefore they've got to be committed and sort of they want to do it. They're not forced to do it. But I think but as you say, like when you have a scenario like in Israel, you can see like the entrepreneurs per capita and capital raised and this sort of thing is materially higher R&D because they are, effectively, I wouldn't say forced into it, but it's a way of life. And you kind of, and when it is, people adapt. Like I think human ingenuity has proven throughout the stages, and everyone sort of worries about, say, AI as an impact, but human ingenuity to me actually is it's been shown time and time again that people are adaptable. And they sort of, that each revolution sort of comes and there are job displacements, but then people adapt and they create the future jobs, which I think is an exciting time. And so it's going to be interesting to see how it sort of plays out. But I think that, love the sector and love backing founders in the world that we live in. I think there's going to be more people building businesses in the future in Australia, in my opinion.
Stu, I totally agree. I think that AI is going to unlock opportunity for a whole bunch of people that already have entrepreneurial appetite and drive and capability. And it's also going to force a whole bunch of people to think differently about how do they create a career and how do they make money, how do they put food on their table and pay for a house. And so I think people are going to be, we're going to see this real interesting transition in Australia where proactive entrepreneurs are going to capitalize early and reactive entrepreneurs are going to learn a lot of lessons, and we're going to see this influx of new people building things. And hopefully we're going to see some really powerful solutions that come from a lot of industry experience coming into the market and transforming the way that companies and people, live and operate. And so it's an exciting time. We first met about 10 years ago. You joined Steve Baxter and his family office. Do you want to talk a bit about that stage of your journey and the creation of 1013?
Yeah, sure. So I guess I started looking at venture. I was in Brisbane. I was working at KPMG in the M&A team, and I was running so I was doing sort of mid-market transactions And I had started a e-commerce business on the side that I was trying to run in my free time between 10 p.m. and kind of 1 in the morning and on the weekends. And I was importing stuff from China and like getting it sort of set up and doing all the branding and marketing and distribution and everything. And so I was spending a fair bit of time in the startup kind of ecosystem. River City Labs was a great institution that they were hosting sort of hackathons and startup weekends and things. And so at that point in time, it was sort of early days of trying to build an ecosystem here in Brisbane. And I met Steve, and I think he cut me down on like one of our pitches on startup weekend, as he tends to do. But it was great. Like we built a relationship over a bit of time, and he basically said, look, he was starting to invest in technology companies. He had made about 10 investments, I think, at the time. And I joined up with Steve. I told my wife, like, hey, I've got a corporate career that goes in this direction, or my ecom business sort of continues to go, or I could go and learn from, like, I guess there's so many opportunities like this, like, cut my salary in half and go and take a leap of faith into the space to kind of join up. And, that was the beginning of the relationship. And Steve and I have been partners ever since, so closing in on over a decade now. It's been wonderful to work with. But the original days, I was sort of working for Steve, helping him basically do his investing. I had a lot of deal experience, and he was obviously the ex multiple time entrepreneur and had a windfall from a couple of exits, and he was looking to invest behind great companies. And, basically we were doing principal investing or direct investing into early stage technology companies, probably much more overweight than most family offices, particularly around Australia. And it was a great sort of time. I think I spent like four or so years running the family office for Steve. He was also on Shark Tank at the time, so I got to see behind the tent on all of the Shark Tank sort of investing. We saw a lot of consumer companies. But I mean, over that time, I think we probably went from 10 to about 50 different portfolio companies in Steve's portfolio. Some of the name brand ones are like Clipchamp, where we were the lead seed investors, and they ended up being acquired by Microsoft. So one of Microsoft's first acquisitions in Australia. And now one of the Microsoft Office suite. If you look at Clipchamp, it's the online video editor. So it's pretty amazing that a Brisbane-based company is now kind of like servicing, I guess, customers for all their video editing around the world as part of the Microsoft stack. So it's pretty amazing what you can do and what's possible. And so, we've backed companies like Go1, who are in the back, like a corporate education marketplace, now sort of, one of Australia's unicorns. And we were sort of invested in them at the earlier stage of like when they just finished YC, and sort of backed them on their first check post Y Combinator. And so, it's been a really fun journey building with Steve. And then what we sort of saw what was happening is that like we were kind of hitting the sides in terms of dollars. Steve was investing between 100K and 500,000 on a deal. Seed rounds were kind of pushing into the millions, and we were collaborating on deals in any case. And so we started looking at a different model. We met up with Jason Calacanis in the US on like a US trip, and he was building out the syndicate, which is like a large syndicate. AngelList was starting to kick off. And we sort of said like, hey, is there an opportunity to take a balance of like the model of venture capital and the model of angel investing and a platform? And we put these together. Like, is there something that sits in the middle that's interesting, that provides access to investors to invest in these amazing companies that we're accessing and we're seeing great opportunity to support, but at the same time get the benefit of building a brand and being able to like have a good offering to founders at the same time? Because founders don't necessarily want to have 20 different angels on their cap table, lots of signatures to wrangle, etc. But if they don't have to meet all of them, and they get the benefit of those people's experience to be able to help them, and they're aligned, then that is the best of both worlds. And so we built Ep13, which is effectively a deal by deal venture or investment platform. And we started in venture, and we've just launched a new category. And so we started in 2019. First deal was kind of like, we had 20 people on our investor list that were friends like that we had been co-investing with over the time, many familiar faces around Brisbane. And now we have sort of closing at well over 500 investors, mixture of kind of founders, operators, corporate scale up. So a variety of different people, but awesome backgrounds, good diverse skill sets. And we leverage that all the time for deal flow, for supporting those companies, and for due diligence. So we've spent a long time trying to build this model and this engine for deal by deal. And now we've invested about 120 million into about 60 companies at the moment.
Incredible journey going from 2016, starting with Steve in a couple of years in his family office, to a turning point, right? Really an inflection point where you decided to go from, investing private capital to investing in a syndicate. How did you come up with the name 1013? Let's start there. Then, what were the early days of 1013 like, and what's the structure of the business now? And just give us a snapshot.
Yeah, so the early days, so 1013 is effectively an aviation theme. It stands for 1013 hectopascals, which is effectively the air pressure right before takeoff. So we talk about fueling founders. The founders are the pilots. We want to be the fuel backing them and then get them into the takeoff and then into the jet stream. So that's kind of all the thematics that we talk about at 1013, all aviation themed. So Steve and I guess, co-founded the firm, 6 years ago. And effectively the structure then was pretty scrappy, to be honest. We were our own little startup. So we had a small team from the family office, and we started figuring out financial services licensing, that sort of setup stuff. But then at the same time, we were hacking together like 6 different tools with trying to make like CRM to connect and do all the things that we needed to do to onboard investors in a compliant way, and all this. So we've basically been building our own technology platform to be able to enable not only offering deal by deal at scale, but also enabling much more in terms of the underlying stack. And so I guess our take over time is that we're building an engine here that is pretty efficient at doing what we do, and think we're probably building arguably have the best platform for it in Australia, and make it not relatively easy for people to get access to private market investments, which are pretty difficult to access. And it's probably the thing that we're trying to solve for, is how do you take, great high quality investors that don't have access, they can invest in blind pool funds. But if you're trying to do deal by deal, there's a whole called rigmarole or challenge that is in actually trying to get 50 people to sign documents, wire you money, do it compliantly, and then have that all done in the space of a week, which we kind of do. And so we sort of made ourselves competitive with a venture capital firm. So just because our LP structure or the way we have, we don't have committed capital per se, doesn't necessarily change our offering to founders. We want to compete for the best companies, but have a value add that's probably even, deeper than what your traditional venture fund is. Because a venture fund by nature, you're sitting there as a blind pool fund. Investors put their capital in, they back those managers, and they support them, and they're looking for 10-year returns on that investment. But their activity is relatively low as an LP base, and effectively you as a founder get the benefit of working with that firm, but not necessarily get much benefit from the LPs, maybe sometimes. Whereas I guess our offering, if we think about it as network-based investing, is that you effectively get the best of both, where you have us as a team who's supporting you in the same fashion, but at the same time you get this underlying group of folks that are happy to kind of open the doors to future customers, happy to give you, some advice on how to build out your technology stack, happy to give you advice on go to market when you're entering the US market, all this type of stuff. And we don't think we're the best place only to do that. We can just tap people on the shoulder and say, hey, you invested 50K into this company. They need a bit of help with this. You're one of the best in Australia at that. Can you go and have a coffee and give them some insight? And so that's where we think that the benefit comes.
7 Questions is a podcast designed to help the audience get to know people like you, people that are instrumental in driving the Australian innovation ecosystem. In the case of investors, it's people that are investing in the next generation of great companies and great founders. And so it's important that people understand the business model that you use, the vehicle that you invest through, but also you, the person, and what lessons have you learned along the way? What decisions have you made that worked really well? What decisions have you made that, you've learned really good lessons from that you will apply differently next time? So talking about 1013 to me was the absolute right model at the right time for the Australian innovation ecosystem. It encouraged more people to invest into early stage tech. It made early stage innovation investment accessible to people in business, right? Career professionals, board members, people that own family business that were busy doing other things, but were curious. And also, like you said, had capability, previous experience, lived experience, work experience, and relationships that could I guess, energize and accelerate the companies that they invested in. So great platform for ordinary, everyday, I guess, people who have reached a stage in their career where they could be deemed a sophisticated investor, and give them access to learn about and invest into early stage companies in a way that's both structured and also that's de-risked, because you guys do some really great DD. So question 2 of 7 questions is really about, well, what's the unique insight, the secret sauce, the way you go to market that is an advantage for both the people that invest through you, I guess do you call them limited partners or not? And also for the founders that get the benefit of partnering with 1013.
Yeah. Look, I think the biggest differentiation, and I've kind of talked to it, is the network that we have built. So we call it like network driven investing at the minute. But what that means in theory is, because we don't have a committed fund, we can be pretty flexible in the way we source and incentivize deals. So we have like Scout Network, where all of our investors, if they share deals to us, can share in some of the economics around a deal. So therefore we have got
Awesome.
hundreds of people out there that are basically like, trying like that when they meet someone, a networking party, and go, hey, like this person could be interesting. Then they send us a note and say, you should definitely have a look at this company. So we have like, I guess, an ability to kind of have, wider tentacles in our opinion that helps us, I guess, like source better. And then we've basically built our whole, I guess, an AI platform that has mapped all of our investors, all their skill sets and their backgrounds, what industries they're in, what their sort of like skill sets, industries, companies. So we can go and search, hey, who has got a background in automotive, and it'll basically bring up like these 6 people are dealership owners, and so that will be super helpful when we're looking at an automotive company to go pick up the phone to the first 5-10 people very quickly when we're doing due diligence and get a steer of like, are you using it? Have you heard of them? Are they interesting? Do you hate the product? Do you love the product? And we do that like all the time. This is like, I guess, like how it helps us get to the answer quicker. And basically, obviously, like, when you're reviewing companies, you're indexing and providing like a due diligence sort of like, you have a variety of different things you look at, particularly focused on the founding team. But at the same time, you're like, is this industry interesting? Is the way they're going about it novel and going to be sort of, have a long-term opportunity? And so the way that a model works is like, effectively we split it into like, how do we source more effectively given like a large network of investors, operators, ex-founders, current founders. So that's like, so the everyday person who's a sophisticated investor can get access to 1013 and become part of our community of investors. Then we use that, like leverage that for due diligence. And then once we're invested in those people, we also have a program that we call like Radar, which effectively is like, how did the founders then be able to see who's invested in them, ask questions, put an ask up like, hey, I want an introduction to X company. We post that to all the investors. They basically, someone could go button and have a double opt-in intro done immediately. So we kind of built like all these kind of like, I guess, frameworks to like scale what is like generally like an unscalable thing. It's usually someone doing an opt-in intro. And so we've tried to sort of build it. And so when you're thinking about it from the founder perspective, it's like the pitch is like, hey, we bring the capital that you want. We participate. We have invested with all the other VCs in Australia. So we don't, we think we're sort of aligned in terms of like ability on that scenario. We're not asking for any, weird or difficult terms. But on the flip side, you basically get an underlying group of folks that are also going to be able to help you in a way that's probably better than, and a bunch of them are founders themselves. They're always happy to have a coffee and help you out. So there's like, I guess, arguably a benefit to that. But on the flip side, then why should investors look at our model? Like, I think what we believe in hugely is like the power of community, and we run events, we run education, sort of, I guess, like courses with our investors to try and help them get educated on this asset class. Look, it's not for everybody. There is, as you said, you used the word de-risked earlier. Like I would say, it's de-risked for venture, but still, very high risk in terms of like the type of asset class. And so we want to educate investors that like, hey, you should build a portfolio. You should spread your investments across multiple companies and not go overly heavy into only a couple of early stage tech companies, given the high, the risk associated with the asset class. And so we try to do a lot of things to make people, I guess, like connect in real life, build those relationships, get access to great companies and investment opportunities, and get education. So they get long form memos, they get to see videos of the founders, we've tried to make that scalable so that these busy people can have bite-sized consumption and be able to make a decision, but also at the same time be able to learn. Like, a lot of folks are even using this sort of asset class to learn what's going on in technology and what models are coming through and what is happening with AI. And so this is a way where you can see long form content of like how these businesses are being built and go on the journey.
Mate, it's a really cool model, and you can, having watched 1013 mature over the last 6 or 7 years, you can see that it's not just the tech, it's also the relationships, and it's also the quality of the team. You've got some amazing people on your team. Do you want to talk briefly about the journey to find and bring some of the amazing people you have on your team into the business and how that's helped to transform 1013?
Totally. Yeah, I mean, we started off as like with, originally most of the team came across from the family office with Steve Baxter in the early days. But like I recruited sort of like the first person that I hired was Aunt Bo, who is now a partner in 1013. And Arn was a ex-lawyer, had started an enterprise software company, had sold that. And then he reached out for an associate sort of level job. Arn was just amazing, awesome. Like he sent me like a pitch deck. It basically was like why you should invest in me or why you should bring me on board. It had things like, this is what I've been doing. I've been running like my family's sort of investment portfolio and technology on the side. These are my key thesis bets, and like these are the returns. He basically like, it was like totally not like what you'd expect from a lawyer, if you know what I mean. So
yeah, I do.
so he stood out like when we sort of started talking, and so authentic and, like an absolute legend. And so, I'm joined up in the family office kind of like when I was a couple of years in, and then has been now as a partner in 1013 and been, absolute sort of, massive valuable sort of person to rely on across our firm. And then someone like Sophie Robertson, Sophie leads up all of our investor relations. So Sophie, similar to me, like built, I guess, a lot of skill set in institutional, like equity sales in a more corporate environment at Credit Suisse in like London, Sydney, like, I guess like had coverage and working with like large institutional and smaller investors. She actually went through, I believe it was like one of the start mate sort of programs so she was looking to move back to Brisbane and was like, look, not sure, wanted to stay in the sort of the, I guess, high end investment banking sort of world, but had great sort of skill set and had dealt with investors forever and brings like such a good rigor, but also just amazing relationship person. And so, we needed someone to lead that part of our business up. It's a core part of our business. We're not exactly the same as a venture firm where only, investing is the core. Like in our world, we focus very strongly on how do we engage our investor base? How do we grow that investor base? And so Sophie leads that up for us. So she's been on with us for ages and like can go across the whole sort of team, but we feel very privileged to have, awesome folks that are digging in with us and building the firm together.
Mate, I think it's a credit to you to have attracted such high caliber people that truly are making a great impact in the ecosystem. I'm lucky enough to sit, attend shareholder meetings with Arn at One MRI, and just the contribution that he makes is fantastic. And obviously, I've known Soph for a long time, and I think the role she plays, not just for 1013, but also more broadly in the ecosystem as a connector, she goes well and truly beyond the capacity of someone managing investor relationships. You can sit down with her and she can effectively and capably pitch and organize any investment you've made, and really understands the technology, the business model, the go-to-market, right? She's a powerhouse, right? And I think having you and a stable team of high caliber people and the broader team at 1013 really sets the scene for an organisation that can effectively deploy capital and make a great impact here in Queensland. But you've got investments everywhere, right? So, do you want to just give us a little understanding of what you invest in and, how diverse are some of the investments that 1013 has made?
Yeah. Yeah. I mean, freedom and investment mandate freedom is a blessing and a curse. So in effect, when you don't have a committed capital fund via a specific strategy, then you have, I guess, freedom to be able to pursue investment opportunities that you think are, good opportunities. But at the same time, we still have to pitch them to our investors and get support, right? So just because we have interesting ideas doesn't necessarily mean that they are like going to get sort of investor support. So they still have to have a business case that stacks up. We've got investments I would say about 65, 70% of our invested capital is in Australian startups. And the remainder are international. We've got investments internationally, like a bunch in the US, UK, but also some even further ashore in Africa, mainly in fintech in Africa and Southeast Asia, India, etc. And so we typically, I guess, have focused on how do we leverage, again, our network of interesting people to continue to build relationships for deal flow sourcing. And so we just have over time built good relationships with other VCs, other angel investors and founders on the ground, and then they often start to share deals. And so, we're not prescriptive on we need to be Australia first, although we do believe that you get sort of asymmetric information or better information the more connected you are, the more plugging in you have. And you don't want to be the person who's sitting there going like, why is this person from the other side of the world reaching out to us? Does that mean that you rarely have to sort of understand why that business is sitting in front of you pitching? Because often, and it sort of goes to why like even cold pitches are sometimes people say like, well, why wouldn't you look as much at cold pitches? Like we, gave you information on your website. It's like, yeah, we get hundreds of those like a month, right? But that doesn't mean that the quality is sort of arguably lower because people have spent 2 minutes just sending you an email versus like, hey, how do I get in front of the right person and get in front of a decision maker? It's kind of like if you're doing enterprise sales, like why would you go and pitch? By sending off one email, you're not going to get a result. So like, why do you think the same thing will happen in sort of venture and raising money? We have a handful of interesting areas that we spend a lot of time on. We have got like one of our investors in Ep13 as a hold co or like a GP is actually a guy called Joel Pobar, who's an ex-Brisbane boy. Joel he was leading inference at Anthropic. Amazing guy, I would say in the top 20 people in AI in the world, probably at the minute. And he's now working very closely, with the leadership team at Meta and Facebook on building out their AI strategy and how they deploy $500 to $600 billion. So Joel really helps us in terms of forming a view in AI investing and where that's going. I think that's obviously the massive thematic that a lot of VCs are looking at. The freedom that we have is that we don't, we can port and sort of adjust our focus areas depending on how the market is going and which direction it's going. Because I think that it's an interesting time at the minute of like, say if you're like a B2B services focused fund, B2B software, focused fund, that software is going to arguably cents on the dollar from a creation perspective. Then there's like more existential questions about like what is moat, how do you get distribution, how do you not get rolled over by the large language models? So I think like our thesis is ever evolving on what we're looking at and what we're investing in. But I would say good chunk of focus on AI at the moment, but also like the next order effects of what happens if AI is successful in the way that we think it's going to be. Then is it like, instead of software as a service, is it service as software? Are businesses that are services businesses going to now start being, I guess, like I think there's a $400 to $500 billion sort of market size for software, but there's an $11 trillion size of services at the moment. And what we're seeing right now is like AI capability is now with reasoning and the ability to kind of do agentic work. You can effectively start to see really interesting kind of evolution of what software starts to become with AI and moving into businesses that were probably uninvestable in venture capital in the past, but potentially will be more investable to the future. So it's going to be an interesting time. So I guess like it's a long-winded way to answer your question because I think that there's a lot of the tide is changing in terms of like what does venture look like and what do you invest in. And so historically, I can talk to you about like we've invested in things like done a lot in healthcare, a lot in education, fintech, AI, like B2B software. But I think that like the view set is probably changing quite a lot in terms of what looks interesting into the future. So we're at like, I guess, a turning point in time in venture, in my opinion. It's going to be interesting to see how it plays out.
Mate, there are so many topics that we could dig into right there. AI is fundamentally changing the landscape. There's no question about that. I think some of the insights that you have and that your team are probably working through on what does that do to your investment thesis and do B2B SaaS companies go to cents in the dollar in terms of valuation? That stuff is real and on the lips of every investor at the moment, and creates a challenging environment if you're a software only B2B founder at the moment. But you bring into play things like robotics and a whole bunch of, very, very quick emerging technology and capability in the robotics domain and the humanoid domain. And how does that join up with AI? How does that make autonomous services happen? I think the displacement in the economy is going to be far wider and also way deeper than maybe people are thinking about. Having Joel as part of the team there and advising you guys is incredible. He brings such great insight into what's really happening right now at the biggest companies in the world, and pulling that into your investment thesis must be super powerful. How are you guys, if you were looking at thesis and themes, and where are you spending most of your time at them?
So we are spending, we're starting to try and understand like second order effects of over time, I think a pure play B2B software businesses, which we had typically looked at, it's sort of harder to sort of get support on. It's like in the future, we're sort of thinking things are like robotics is going to be, very interesting as you just sort of got into things like healthcare, which have also physical components where there's physical devices. We just think that like even things like drug discovery, like our expectation is that you're going to be able to solve bigger problems faster. And so because you have like, I guess, agents and you have ability to kind of compute, and you effectively can have 4 or 5 different agents doing work for you and research, et cetera, over time, you can really amplify like your ability to kind of solve problems. So our expectation is that like problems get solved quicker. And so therefore like the playing field sort of moves towards like, well, then what are those problems that are like have been harder to solve in the past, but we can now get a shorter path to get to them from an investable perspective. And so we're doing a bunch in like science, like we've got investment in drug discovery, and we have got like autonomous healthcare system, sort of like AI coding platforms. So we've basically been looking, I guess, quite aggressively at like, and what are industries that in the past were not really, were harder to get distribution in. So these are companies like, sort of areas like healthcare, culture. Yeah, like I guess there's a variety of folks where you and doctors, like where you're trying. It's always been borderline very difficult to sell to because they don't have adoption, but because you're giving people so much time back in their day, because you can automate a lot of work functions, then effectively it's going to be pretty interesting. So we're looking at like a science company that basically will have like a hardware component that records your like logging of your notes as a starting point, but then the next phase of that is then like they're ingesting all the data and making it much more sort of easy to compute and sort of break down the data. And so, yeah, it's going to be interesting to see how it sort of plays out. But then the second order effect is like we're actually also looking at like the vertical of, we haven't talked about it yet, but we actually launched a new division called entrepreneurship through acquisition, which is effectively backing entrepreneurs to buy instead of build. So these are taking over more traditional businesses that are non-technology savvy, often have a physical component, but at the same time bringing and ingesting and using technology to supplement and improve those businesses, help them grow faster, get better margins to execute on. And so, yeah, it's going to be an interesting kind of journey, but that's kind of like our first step into a more a differentiated business model on how it sort of is playing out.
I think that approach that you're talking about there, Stu, with helping entrepreneurs buy into existing businesses makes so much sense, because with the speed that AI is enabling people to transform business operations, I think it's an incredibly sensible business strategy, and might make attracting investment even easier, because you've got a whole range of high net worth people or people that could become sophisticated investors with business experience that can see the problem but have never been able to solve it. And if you can partner them with an entrepreneur that knows how to solve, then we could really transform a whole range of industries and businesses that previously weren't really accessible as investment opportunities. Hey, Stu, question 3 of 7 questions is, what's one thing about starting and operating a fund that founders probably aren't aware of?
I think for me, like running a fund and a firm, an investment firm, and since we don't have a sort of material fund, but we're our own startup. Like we have to manage our own stakeholders. We manage investors just the way that they are talking to us as investors. We also have probably an exponentially larger set of investors that you sort of have to manage those relationships. And then, it's like a dividing time. Like I think that I think one of the biggest challenges with VCs is time management. You have to have a diversified portfolio, meaning like because of the risk associated with the early stage. But then what that means is like you can't put in too much effort into any one company because you're effectively stretching your relationship with other companies. And so you're always on from an investor perspective to how do you spend time on portfolio management, which is like supporting those founders? How do you spend time on sourcing so that you spend the most time getting into finding the best companies and doing due diligence and deal execution? And then at the same time, how do you manage your investor base and marketing and growing of your own firm? You're always fundraising, like you're never really done. You're sort of always building relationships, taking on people's money. As a startup founder, when you take on someone's hard-earned, investment capital, you want to do the best thing by that. You want to sort of give them a great return, and that translates also to venture investors, right? Like, well, any investor, we take people's, and we are not institutional funders behind us other than the sort of venture capital development fund. So we effectively are often, this is people's hard-earned money that they are putting to work behind us. So we don't take that lightly. We want to do the best thing by it, but also that comes with that as a weight and an obligation to manage it, to do the right reporting, to work with those folks. And so I think that it has a lot of alignment to a traditional business. A funds management business doesn't necessarily mean you get away from the things that you have to think about as a startup. Like you've got to think about marketing and growing your business, and how do you grow both sides of in our view, like a marketplace where we've got, how do we have the best offering for founders and the best offering for investors so we can attract more of them.
Mate, yeah, there's so much going into running an investment firm, and it's important that founders take the time to think about the complexities and the responsibilities that their investors have, because that helps them to understand what expectations they should have of their investors. I know myself, I spread my time across a whole range of activities, and it means you're right. Like I can't allocate a lot of time to any one thing. And so I try and do things at scale that make a difference. Stu, we'll move really quickly on to question number 4, which is, what's been a pivotal moment for 1013, for you as the managing partner at 1013? What's been a deal you've missed, or a relationship you've built, or a lesson you've learned, something, or a market shift, something that you think has been pivotal on the trajectory and the thesis for 1013?
I'll pick 2. Like I think like it goes without saying, but like I've had a great partnership with Steve Baxter, who's sort of backed us in the early days and really sort of helped leverage Steve's, I guess, like background to help us start to build and get investor support. And he's been a massive supporter from an investment and a personal investment, and continue to support our deals. So Steve has been like a great sort of long enduring supporter of like what we've been trying to build at 1013. And then what I find is like you get these pivotal moments of sort of change and adjustment. Like we took on board like Joel Pobar as a supporter, and that just brings like so much insight in terms of like an emerging category of like how fast AI was moving. What it helps us see around corners, helps us understand like what's coming down the pipeline from someone who sees it at the coalface. And that is like kind of in my opinion invaluable. Like you can't like buy that experience, if you know what I mean. Like this is not your traditional sort of setup. And so I think off the back of that, it really sort of helps drive, like our thesis of how we look at software and AI, and having that insight. It might only be one sort of person, but when that person is in the top few people in the world, really understanding the subject matter, then it's really helpful. And so I can think of lots of times this has happened with our existing investor base. It's really helpful on specific industries and things like that. And so I think the gem is basically finding great people that you trust, that you can work with, and give you the insights, and help you get over hurdles in a quicker fashion, and sort of navigate the environment is the way that we sort of play it out. And we try and use that we try and use that thesis all the time with like, I guess, a wide sort of network of investors and trying really mapping who everyone is and understanding them and building relationships. And so I think that like, people are always really important in the way sort of we think about the world, and they have a huge influence on us because we think people have got great different experience that is better than ours, and we leverage that to make better decisions.
Stu, I learned a really good lesson about great quality people and people with different perspectives. So one of my experiences is I always think about, if you're going to have an advisory board, surround yourself with people that come from different points of view. So I look for someone on an advisory board that is the voice of the customer and the kind of ideal customer profile that you want, and someone that's been a really senior decision maker in that industry. I look for someone that's the voice of capital and has that experience from a funds management and investment perspective, that understands how to help an early stage company with their capital strategy and preparing for it and then executing on it effectively. I think you've got to have someone that is the voice of exit on your startup. So how do you prepare your company for long-term shareholder value, and how do you help your shareholders realize a return on investment? Whether that's an ultimate exit or it's a partial liquidity event is kind of dependent upon the company's trajectory. But I do think that investors want a return on their investment. And so having the voice of exit on your advisory board makes really sense. Then I think you have to have voice of product, right? Like, so what is the expertise around the business that you're in, the product, the service you provide? And if you can get those things right and around the table, and you're open to learning from those experts, then I think you can set your business up to be really successful. And whether that's an investment business or an invested business, an early stage tech company in whatever description, having great people around you is fundamental. It's been great to hear all about the things that you've been working on at 1013. Let's switch now and go to question number 5. What's one of the hardest decisions or challenges you've had to face as an investor investing into early stage tech?
Yeah. Look, I think the harder decisions are always not even really financial ones. It's really about the people. Like, you build good relationships with people. Everyone sets out, we invest the earlier stages. This is pre-seed and seed stage, and everyone has bold dreams and ambitions and of what happens when things go right, and the enduring success and opportunity ahead. But the reality of like venture is that only 50% of companies probably won't reach that sort of result, even more. And so you end up having I guess a lot of people that you have good relationships with and believe in, but you have to have quite a lot of times hard conversations, whether that's like a follow-on round of funding and you're unable to come to the table because they haven't sort of hit milestones, etc., or you're trying to provide guidance of like, maybe we need to sort of move in this direction, or even just like constantly having conversations at the moment around like, is AI disruptive to your own portfolio of companies and startups, and they've been building a team around a certain thesis, and now they're getting disrupted by some of the, I guess, like AI large language models. And so I think that we face these quite consistently, where we're invested across a lot of different companies, and things go wrong and things don't work out, and you have to have these type of tougher conversations. But I think it all comes to the territory, right? It's like, but at the end of the day, that the harder thing is probably more like, you don't want to disappoint the other side, but and you work with founders, but you also, I think radical candor is also helpful. And so it's like, if people who are invested and aligned with you are not willing to kind of have those hard conversations and tell you the truth, then who is? Because like people often sugarcoat, don't necessarily want to give you the honest truth. But sometimes I think that those are the ones that sometimes those hardest conversations are actually the best conversations, because then people, everyone gets a clear understanding of where everyone is at, and you kind of have to figure out a pathway forward. And so we don't like to string people along. We try to work pretty transparently with all of our founders, and then the same goes for new companies. But I'd say that the hardest conversations are really around, like, I guess, when you've got a good relationship with founders and you try and maintain that, but at the same time you have to make sort of investment decisions based on whether you should, provide further invest in a company if it hasn't quite met its targets. And so there's always these challenging kind of I guess, scenarios that you have to navigate. But at the end of the day, like, you live and die by the way you navigate those, and founders talk. And so people want to know that you're the right sort of people to have on the team, and you're going to be, transparent about how you work with them. And so, yeah, I guess like we try to be as transparent as possible and expect that back with the folks that we work with. There's often many times that I can think of over the last few, many years, especially post 2021, there was a lot of capital raised, lots of companies raised, and post that there was, layoffs and a bunch of like, yeah, I guess like turbulent times that we've had to navigate through. So yeah, I guess like we're feeling like we're fighting fit, having had helped sort of like work with a lot of our portfolio to try and navigate the environment. Sort of we're coming back into the next round, which is kind of AI, and what that means for everyone's businesses and the outlook.
Stu, you've got a great team of people at 1013. How do you coach them? So as the managing partner, how do you help them develop their skills to have hard conversations? And maybe what's some advice you give to founders who are building their own team of people and teaching them how to have those necessary hard conversations?
Yeah. Look, I think what I've learned over time is like people value transparency and you being real. Truth hurts, but at the same time, if you don't hear it, then it can be even worse because you can't correct, you don't get the feedback. And so we try to have, I guess, strong feedback as a culture internally, but also externally in how we have conversations with founders, and just sort of tell them honestly what we think in our position. And look, we're not always right. Like, like oftentimes like we're sort of parachuting in and only get a small subsample of information. And so it's like, hey, look, we don't want you to, basically fully base your core decisions on this. You're in this day to day, but in general, the conversation should at least be like, this is our interpretation from the outside, or this is how we're thinking, or this is how markets are changing. And we get to see, index on 60 different companies that we get to see under the hood of, whereas you as a founder get to see one. And so, you can have tunnel vision. And so it's oftentimes like relatively helpful to kind of bring that external perspective together, but also do it in a way that's not going to sort of be detrimental to them, or like, founding and going on the founder journey is also very difficult. You have to have thick skin and be able to kind of navigate through that and make the right decisions. And there's a lot of, I guess like day-to-day firefighting that is required. So in terms of like our culture, like we very collaborative, but very open. We also try and be very transparent to our investors and LPs around how things are going. Like, I think like you don't want to be hiding information. And I think it's just, if you can believe on free flow of information to a point of like what's needed to know here and how do you feed that back, I think it works well in terms of culture because, we have a very flat structure. We try and believe that we have great operators even in our own team. And if you don't give people free rein to go and execute, then that you're sort of, I guess we're believers in you have people on the team to go and to do their jobs and do them well. And so you've got to back them to give them the free rein to go and execute and do the things they do well. So I'm not sure if that answers the question, but broadly we work hard on trying to have a good, consistent culture and treat people well and look after each other, but at the same time be pretty frank and sort of direct around how we think things are going and what we need to do to fix it. Because if you don't, I think you don't fix things if things are sort of bury your head in the sand.
Stu, I think that's great. It's great feedback and it's great advice for any founder, really. The idea of firstly being transparent is the first thing. The second thing is, feedback delivered quickly rather than delaying it helps people take action in the moment. And that can often be a small course correction rather than a large one. So I think that fast, honest, transparent feedback and always treating people well. If you got those three things right 90% of the time, you're leaving the founder and your team in a better place. So I think that's great advice for anyone. Mate, you've got a lot going on. And like all founders and all investors and all people leading businesses, life is a portfolio of responsibilities from family to business to community and those other things. So how do you maintain your energy, your mindset, balance your relationships? What's some of the things you do to, to keep going day after day?
Like Sophie always makes a joke that I just don't sleep, but I don't know. I don't know if that's completely true and good for your longevity. Look, I think that I'm fairly deliberate about it. Like I have young kids. Well, when I say young, like they're sort of 7 and 4. Try to be, as present as possible whilst managing, I guess like always being on as the sort of expectation is you want to be quick and responsive to people, but at the same time, that doesn't like you need some level of boundaries. And so I'm fairly deliberate about it. I try and from a healthcare and I guess like a fitness perspective, try and make sure that like I have make space for that during my week. So probably have like 4 days of exercise a week, which is as much as I can bear without getting sort of kicked out of the house in the mornings and the evenings, etc. So do a lot of, I guess like running. It also helps clear my head. That's my own sort of like meditation. And so I'm training for like a 25-kilometer trail run at the moment. So like do a bunch of this, which is keeps me, I guess like not only mobile, but also clears my head. So I think think about it as sort of exercise. I look at family time as like 5 till 8 p.m. kind of, put the pens down. I have like a phone jail. I get home and then like lock my phone in the jail and then try not to, obviously pull it out and respond because like there's always something to do, right? Like when you have that many
Yeah.
stakeholders that engage with, you've always got something pressing. You've got people pinging you on WhatsApp. You've got an inbox that's overflowing. And so, we try and be as like proactive as possible about managing that. But at the same time, like, you can always get to it in a few hours most of the time. Like this is not live or die stuff generally. And then, but I think the thing that also just gives me energy is like, I'm a people person. I really enjoy engaging with other people. And I think that like, I get energy from the fact that I get to spend I have variety in my day. I spend a lot of time working on different problems, helping people solve for them, looking at, inspirational founders that are trying to build something and they're very ambitious when they're coming to pitch. Like obviously they have big dreams and, our job is to sort of fuel and fund those dreams. And then at the same time, it's like once you're actually invested, then you're kind of, you're in the trenches with them being like, hey, how do we solve these problems so you can get to the next milestone and sort of improve the business, etc. So I think about it like, look, got to stay fit and healthy. I think like without that, sort of get in my own head often. And so I think that that's very helpful. I try to be, I coach my kids' sport as well. So I carve out time for that. So whether that's like cricket or rugby for my son, my daughter's not quite there yet, but I'll get into it at some point, I'm sure. And so, trying to make sure that sort of present as possible on families and weekends and carve out the time to make sure that I'm present, but at the same time, then, try and show that same level of being present and throughout the workday when we're sort of dealing with all of the fun stuff and variety that comes through as an investor, right? You get to see a lot of stuff and you're always dealing with a problem. You're always dealing with like decision making and investment committee and et cetera, and juggling times. I've tried over the years to break up different ways of like how I like to work, but at the end of the day, I think I keep a fair level of flex, but also have things that I safeguard kind of that I don't flex on at all.
Do you schedule your exercise all in the morning, or do you do some during work hours? What happens when you travel? How do you keep that good routine?
Yeah, I do it all in the mornings basically, and sometimes at night to have like a treadmill at home, but usually it's in the mornings as early as possible. This morning I was up at 5, so ran from 5 till 6 and then basically got home and the kids are up and, sort of helping out. And so generally do that and do a mix of like kind of cardio and then a couple of days in the gym. And so like I mix those two together, but I basically try and schedule that time and then make sure there's a balance for my wife and I. And so she gets to do a similar sort of thing. And so divide and conquer. And then, yeah, once we sort of get into it, I do more in the mornings just because I think before everyone wakes up, before there's chaos of the day and everything's kicked off and you've got things to work through. And then, yeah, so I don't really do too much in the afternoon and night, but it's a good start to the day.
Do you travel much for work at the moment?
Yeah, I do. I travel a fair bit. I haven't done a huge amount of international travel as much as I have in the past, but travel to, interstate fairly often, been sort of like Perth, Sydney, Melbourne in the last kind of month. And so in that, like, I think, look, a pair of running shoes can always fit into like your carry-on that's why I kind of like it. It's easy to just lace them up, and I actually find it pretty awesome to be able to go and do that in like, different cities, and you always kind of stumble across interesting things. And so I think it's a great way to see a city is just like, put on the running shoes and go for a burn around, for half an hour, and you get to, get your bearings. And so, I enjoy that a lot.
Yeah, that's fantastic. Mate, stacks of exciting things on the radar for 1013 over the rest of 2026. What are some of the things you guys are focused on in the next 6, 12 months, and how can people get involved? Like how can founders get in touch with you, and what kind of founders are you looking for, or thematics are you looking for? And what about investors? How can people who are interested in investing in early stage tech and who have maybe never done it, could they reach out to you? And if so, what are you looking for? How do you engage with people like that?
Yeah. So like when we set out to build 1013, we effectively wanted to provide access to a variety of different investors to an asset class, to a high quality companies in an asset class that's generally a little bit closed off. And so we welcome investors to join up. We are only licensed for wholesale investors, which means you sort of have like an investor certificate or sophisticated investor certificate that basically means that you clear a certain threshold that you are able to invest in this asset class, which is the same across Australia for many, many investment products. But pending that you can meet that criteria, like we want more diversity in our investor base as much as we can, because we think that makes it very interesting to have a variety of different people with different skill sets, backgrounds. And so like, we have investors from all walks of life and backgrounds, and we welcome that a lot. So if you're interested in sort of, exploring this from an asset class and investment perspective, we also make it quite accessible. So it's a minimum of $10,000 per deal to try and build a portfolio across the asset class. And so, we've got a large investor base, always welcoming more. You can just go to 1013.vc, so ten13.vc, and sign up on the top right. You can join, and you can start to get on board with us and start getting access to some of the deal flow that we're working on. At the same time, from a founder perspective, look, as I mentioned before, we kind of have two divisions. Haven't really talked too much about our secondary division, but our first division is like investing in technology founders, startups at the pre-seed through to Series A phase. And so the door's always open. We welcome more and more companies come knocking on our door. The style of companies that we work with, look, we typically index on the highest quality founders that we can find, because they think that they're the ones that are going to be able to break down doors, high ambition, actually go and execute on the problem, particularly when there's such a exciting trend such as AI kind of level setting and resetting the playing field on a consistent basis. Then you need folks that are going to be adaptable, etc. So we're looking for like highly ambitious founders that are solving big problems, but we also want like nimbleness. We're not super tied to like the original thesis, because it changes pretty often, and the playing field is not always. I think we've just seen that companies change, and so it always often comes back to like a 75% to 80% rule is like how much do you sort of love and back these founders to sort of arguably go for it and get it done and have the right level, the right to go and build for it. So doors are always open from like a early stage, but obviously we're focusing on things like artificial intelligence is a no-brainer at the moment. We're doing a lot in healthcare and a lot in sort of infrastructure and agentic sort of infrastructure, whether that's data layers and API structures and otherwise. So pretty open though we don't have like a formal thesis that we typically force folks to look to. We're agnostic on, but we're very sort of heavily indexed on who the people are. And I think it's like the core of investing as a model and venture. You really need to back the right people. And then, we're also investing in entrepreneurship through acquisition, which is more proven cash flowing businesses that are so backing entrepreneurs, really call them searchers, to find and buy companies instead of building them from scratch. So this is a really interesting trend that's come, been being built out here in the last 3 or 4 years in Australia, but has done very well in the US market. And effectively so we're consistently having conversations with folks that are searchers, that are out there meeting business owners from more different, more traditional SMB style businesses, and seeing how they can, we can help you fund the transition to purchase that business, and then use technology to supercharge it and improve it over time.
Yeah, I love that. That's a great thematic. I'm seeing quite a bit of that actually, both here and in the US. And you can see the track record of certainly the US market playing in that space. It is good to see that happening in Australia. Now, you guys also run one of the best events in Queensland every year. Do you want to talk a little bit about that so people know what it is and when it's on?
Yeah, we run an event called Runway, which effectively is a 1-day conference of all things of technology, try and bring, I guess, open people's minds to fresh ideas and bring very high quality kind of thought leaders to come and share what they're working on and how to think about the world. And then also like bringing founders and other folks to tell their war stories. And so, we do that. We run that every year in around November, end of November. It's sort of the end of year wrap. So, when Runway comes around, it's sort of the end of the runway, I guess, for the year, and everyone sort of has a stock take of what's happening in the year, and there's always a bit of a big bash afterwards. So for all the community around the tech ecosystem around Brisbane sort of coming together. So we love doing that sort of stuff for the community. I think it is a net positive to bring people together. Like you never know what happens from a collision perspective in terms of like you always think it's great to see the high quality of folks in the growing ecosystem. I think we had about 500 plus attend last year, and sort of seems to grow on itself every year, which is a lot of fun. And then we do a lot of other events. So we're hosting a big event before sunrise in end of April down in Sydney. We're hosting a whole bunch of sort of entrepreneurs and investors. So if you're interested, more than happy to kind of open up to that type of event as well. So we try and we're heavily community based, as we mentioned. We want people to join us and be part of the ecosystem.
Stu, that's awesome. Yeah, look, I really recommend Runway to anyone that's interested in early stage investing in Queensland. It's a great event. And if you're someone in an executive role or a board role inside a large corporation and just want to get exposure to innovation and startups, Runway is a great event to attend. Everyone's really welcoming, and it'll give you some really good insights and start you on that journey of building connections and learning more about how to invest. Sunrise, as Stu mentioned too, is also a fantastic event happening in Sydney, end of April, put on by, it's Blackbird, right? And if you guys are running an event there, I'm going to be down there as well. It's going to be a great time. I think everyone in Australia's innovation ecosystem probably goes to Sunrise. Stu, thanks for sharing so much about 1013, about your journey, about the team, about AI and the thematics you're investing in, some of the lessons you've learned along the way. We like to wrap up our episode of 7 Questions by asking a rapid fire set of questions. So are you ready for this?
Let's go.
Excellent. Coffee or tea?
Tea man. I haven't drunk
Tea
coffee
man?
in
Awesome.
10 years.
Morning or night?
Morning man. Get up, get into it.
Get into it. Beaches or mountains?
I like mountains. I've sort of climbed Mount Kilimanjaro and done a bunch of hiking, and it's great.
It's on my bucket list, man. We'll have to have a conversation about that one. Books or podcasts?
I am a podcast man. Yeah, on my runs, I plug in and learn from the best minds in the world. It's pretty amazing to. I think podcasts as a product is awesome.
Who are you listening to at the moment? What's a podcast you'd recommend to people?
I listen to Acquired. I like the sort of breakdowns from the Acquired guys. I listen to All In. It's a bit controversial, but they at least cover some good ground and context. Sometimes a bit political, but I don't mind. I think that the thing that's resonated with me is just like kind of the removal of filter. It's been good to hear just what people actually think and when they're just talking as if they're talking with mates, because I think you get to have a bit more realness coming out and the true story. So I think that's been awesome to see, and it's coming out a lot more across a variety of different podcasts. But those are a couple that I listen to a fair bit.
Office or home? Where do you prefer to work?
I'm not sure if I can sit on the fence, but I love. We have a mix of 10-13. We're half in the office, half at home, and I think there's value for both. So I think in the office is great to kind of cover a lot of ground, internal meetings, much better in person, investment committees, things like that, rather than virtual. But then once you're doing deep work and kind of, trying to make investment decision or investment thesis or trying to form a view or build your own tooling and systems, and I like to sort of, sit at home and get a lot more done without kind of a bunch of people around. So for 50-50.
Mate, I'm with you. That hybrid working model has enormous benefits. I think it's one of the best things to come out of COVID, quite frankly. Gym or cardio?
Probably cardio, because you just get out and do it without having to have all the equipment. Based on a bunch of the healthcare stuff, and even we're investing in a company called Everlab. Trying to understand that there's a lot more. I think like lifting weights is important, which, is one of the things that I've been adding to my list after learnings from some of the, I guess, like Everlab protocol, etc. Need to strengthen, sort of continue to lift and build muscle, particularly as you're getting a bit older,
Mate, I got a couple of years on you, don't worry. Hey, who's a founder or an investor you would love to hear from on 7 Questions?
Yeah, I mean, I think I just mentioned Everlab. I think Mark Herman from Everlab would be awesome to get on. I think they're going to be one of Australia's most exciting companies, leaning into the longevity health, like sort of, I know you had Gopi from One MRI on, so it's a similar thematic, but I think it's going mainstream. And I think like preventative health is going to be really important. You could save the healthcare system a lot more, but also you'll see people being much, much healthier for much longer with the emergence of what's happening in technology and benchmarking and all around this. So I think if you can get Mark on, he's a great German ex-founder, exited founder that started, is now doing his life's work in preventative health. And I think that, they're a very exciting company and gonna do some awesome stuff for the world of health in Australia and internationally.
Fantastic. I'm going to hit you up for an intro to Mark. I'm an Everlab customer. So I'd love to have Mark on and have a chat with him.
Awesome.
Hey, Stu, thanks so much for sharing your time and your experience and your wisdom with everyone here on 7 Questions. It's been great to chat with you, mate. Wish you and the team at 1013 all the best. It is great to have you in the ecosystem, making such a big dent on innovation and backing founders. So thanks for joining us.
Thanks, Wayne. Wonderful to cover a lot of ground. Hopefully there was some interesting nuggets in there. But I really appreciate all the work that you do for the startup sort of ecosystem, and great to hopefully we'll see you at Runway.
Definitely, mate.
Thanks for listening to this episode of 7 Questions. If you'd like to learn more about the founders, you can get a link to the full show notes in the description below. Have a great day. We look forward to you joining us on the next episode.